I think what's happening is the powers that be, they're trying to slow gold going up because we're seeing the 10-year yield actually is almost at 120 right now. And they're trying to tell people that with yields going up, that that's bad for gold.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on quite a wild week of life on the planet here. I'm in the US. As you can see, Mario from Mineko64 has joined me from outside of London. And nice to have you on here today because I think there's some wild things happening around the globe that is affecting everyone. And we'll dig into the financial gold and silver portion of that today. But welcome on in. I'm a fan of your channel, and it's great to have you here. How are you?
I'm well, Chris. Thank you for inviting me, and I'm looking forward to talking with you. Yes, the world is, I've never seen the world this crazy before. Not the world itself, but human beings. It's like they're deluded, and we're being like really attacked psychologically, I think. And I think it's going to impact how the financial markets and precious metals move going forward.
Yeah, I mean, a lot of great points you raised there. Why don't we dig in and start, though, with the financial markets and in particular gold and silver, where as we're recording on Tuesday morning here in the US, silver up about 37 cents. What do you see happening here? Are we any closer to a resolution of gold and silver markets, or where does this all stand?
Yeah, I looked at, I was watching the markets this morning here in London, and around 8:20 Eastern Standard Time, gold, or 5 minutes before that, gold was at 1856, 1860. And then the COMEX regular hours came in at around 8:20 New York, and gold went down. Silver is held up. The gold silver ratio, I think, is at a key juncture. We're just above 70. I think if we break below 70, we could see gold go up. Right now, I think what's happening is the powers that be, they're trying to slow gold going up because we're seeing the 10-year yield actually is almost at 120 right now. And they're trying to tell people that with yields going up, that that's bad for gold. But I've made a few videos in the last week saying that if you look at the summer of 2020, the 10-year yield was around 0.55. That was kind of the bottom. And gold bottomed around 1450 after March, and we went all the way up to above 2000 with yields going up. Actually, you see the yields have gone up and gold's gone up. So, and if you look also back to the 70s, I have a chart of the 70s, what yields did, but basically they went from 4.5% in the 60s all the way to 16% in 1981. And gold went from $35 to almost $900. So I think the Federal Reserve, they're going to keep short-term interest rates near zero or at zero. They've said that. I think Evans from the Fed repeated that this week, at least till 2024. I think if the 10-year yield starts getting a little, past like 135, 140, there's going to be trouble for the stock market, and then they're going to have to come in and probably pump up the bond market again. They'll find an excuse to increase QE, and I think they're going to try to keep interest rates, the yields low. Uh, and commodities, if you look at commodities, we are on the cusp, I think, of breaking out. You look at the CRB is going up, oil is still doing really well, copper. A lot of the commodities are in backwardation, which means that people don't want dollars. And yes, commodities are undervalued in relative terms to the stock market. I think it's the most it's been undervalued for like over 100 years. So even if the economies are like in a depression like we are right now. I mean, they shut us down, especially here in Europe. And I think it's the same thing could happen with a Biden administration. I think they're going to turn a lot more towards what we're doing here for the next few months. You could see a lot of money flow into commodities because you just need a little bit of funds from the paper space to move, maybe 1 or 2%. It could make a huge difference. So we could have the same kind of environment we had in the 70s, slow growth, high unemployment, higher cost of living. People call that inflation nowadays, but I say it's rising prices. I think we've had the inflation for the last 50 years. That's what a fiat currency system has done. It's allowed the central banks and the governments to pump up the debt. When the Fed says that they're concerned about deflation, that they want more inflation, I think it's just a ruse. It's just to fool people into thinking that there is no inflation, so they can keep printing and inflating the system. So I think it's more important than ever to be outside the system, physical silver and physical gold. And the other thing that it doesn't only protect you financially, in my opinion, but it also fights the bankers and the people, yeah, and the people that they run in Congress or in Parliament, because those people are all puppets, I would say, of the bankers. So by having large fiat balances in the bank, you're basically financing these people. So I try to keep as little as possible in the bank just to pay my bills.
Yeah, that makes a lot of sense. And you touched on the Treasury here. And it's interesting. I'm curious. It looks like this began right, this sell off began right at the beginning of the year. Pretty sizable jump, almost 30 basis points now. I'm curious, what do you think has happened that at this particular time, such a sharp rise? I mean, we see ever since COVID, it's been pretty flat. And also, just maybe before you answer that, if you could explain to people who might be new to this why a rising yield means the price of the bond is actually going down, so they can have in context what you explained.
Yeah, that's right. It's like let's say a stock. Let's say you buy a stock for $100 and the dividend yield is 2%. But if the stock price goes up and the dividend doesn't change, the yield goes down. It's the same thing for bonds. When the bond price goes down, the yield goes up. That means that corporate bonds as well, they're linked to the risk-free rate of return that Treasury is supposed to be. Corporate bond prices go up as well. Yields go up, and that just means that when a lot of these corporations have to roll over short-term debt, which they have a lot, they use short-term debt to fund buybacks. If yields are going up, the cost of funding is going to go up. So the credit is going to shrink. And I think the reason why we saw the 10-year yield jump here, it was just around January 5th, January 6th, when we got the results of the runoff elections in Georgia. And why was that? Well, because it now means that the Democrats are in control of both houses, and you've got Biden. So there's going to be no gridlock, no limit on the fiscal spending. You're going to have Janet Yellen at the Treasury coordinating it with the Fed as well. And I think that's why the yields are going up. If the Republican senators running in Georgia had won, I would have said that maybe we wouldn't be up. We probably would be around 1%. Even though I think it doesn't really matter who's in power anymore. We've seen even in the last 4 years that is mushroomed, but it's going to probably get even worse with Biden and the Democrats being in charge of the Congress. And the bankers like this because more debt, more fees for them.
Yeah, well, that is the banker template, unfortunately. Although you mentioned Janet Yellen, which is mind-boggling to me that now she's, or I think, going to become the Treasury Secretary. So I don't even know if it means we have to wait for the Fed meeting anymore. Is it like Janet just pumps it in so they can front run it beforehand? But when we see next meeting for the Fed scheduled January 26th, 27th, so about 2 weeks from now, after inauguration day, God only knows what will happen in between then. But what do you, let's say that the yield stays here or continues to rise. I mean, what does the Fed, what do they do? Are we close to the point where they just start buying 10 years too? Start buying the 30-year? I mean, it's hard to
Yeah,
see them letting it collapse without just printing everything in sight.
that's right. I think what they'll do is they'll wheel out Fed presidents, board of governors, and they'll make comments to try to calm things down. The other thing they'll do is probably even fudge sometimes the statistics. They'll make them look worse so that people go out and buy bonds because they think, oh, interest rates are going to go lower. They might come out and start talking about Operation Twist, which is basically to sell short-term paper treasuries and buy long-term. So to bring down the higher, the longer-term yields, they could do that Operation Twist. That I would say that that's one of their tools. And as far as Yellen being Secretary of the Treasury, I mean, they're still going to act as if they're separate, of course. I don't think Janet Yellen is going to be like telling the Fed what to do, but they'll, I mean, Janet Yellen, she was at the Fed for years, so she knows the people there really well. I'm sure they'll coordinate things. And I think someone said that Biden's thinking of a $5 trillion infrastructure plan or a Green New Deal. I mean, that would need the Fed to come up and try to. They probably have to raise. They probably have to raise the amount of QE they're doing a month. I think they're doing 120 billion. And you saw, I think it was last week. I think the Fed came out with their minutes and they're talking about maybe tapering. I think that's just like.
No,
That's so
they didn't really say that. Come on now. Tell me they did not really claim
they
that
were
they're.
on their last meeting, Fed meeting, they came out with the minutes and said that some of the governors talked about tapering, but that's just to manage the market. You see, that's to try to stop. They could do that kind of stuff as well to try to stop the yields going up. So there's a lot of things they can do. Basically, I think the Federal Reserve and all the communication is the most important tool they have. It's almost like a brainwashing management of perception exercise. That's what they do.
Yeah, it's very beautifully and eloquently put, because for better part of 6 or 7 years, I've described it to myself, at least, as the greatest hypnotic thought experiment in history. Because as you quite well point out, it's not rocket science what's going on, but if you just indoctrinate someone with 2 + 2 = 5 until they believe it, things get a little confusing. Although something that I think was confusing for people about decade ago that you touched on, Operation Twist, which where the Fed said, all right, we're going to do it balance sheet neutral. And we're going to buy the longer term bonds, sell shorter term bonds so the balance sheet doesn't go up, which sounds great. But what they omitted back then, and I'm sure they will omit now, is that if you're doing quantitative easing, lowering interest rates, you're essentially offsetting the short term part. In fact, they're probably buying more short term than they're selling, even if they did a twist. So it's like they're just net buying everything. It's kind of like, if you have like a pair trade and one part's hedged out, but they just don't talk about that. Do you see that similarly? Would you agree with that?
Well, I think they could keep doing QE and still do kind of a twist strategy because instead of buying, they'll be buying more longer term paper, and they could even sell short term paper and buy longer term paper and still increase the balance sheet. So yeah, and I think the talk about tapering is just it's really not it's just management of perception. uh I think the balance sheet is going to keep increasing quite a bit. I think we're just around 7.2 trillion. And I just don't see how the economy, I know some states are quite, still pretty normally open, like Florida. Not too sure about Texas, but California, there used to be a saying, whatever starts out in California spreads to the whole of the US. And I think that unfortunately that's what the way they're going to try to move it, uh, implement what they've done in California. And I just can't see the economy doing well. They're going to have to come with more stimulus. I think the plan, I mean, we see it here. They're really trying to flush the economy. It's like a controlled demolition of the economy. And they think they can do that and do the fiscal spending, monetary money printing, and everything will be okay. I'm not too sure if that will work. But yeah, Operation Twist, they can do it and still increase the balance sheet. They just have to focus on buying more longer term paper, I would say.
Yeah, and in terms of tapering, I know there's a large school of thought that the reason that precious metals came down over the past decade was because the Fed was going to taper, they were going to tighten. It seems like they talked a lot about tapering and gave the impression that they were going to taper. Then, 10 years later, they got the Fed funds rate up to the whopping level of 2.5%. And then, as you can see here, sure enough, at the end of 2018, I know a lot of people remember this because their portfolios were getting absolutely hammered until Steve Mnuchin and the plunge protection team came out to prop them up again. So for folks who, if they do start hearing Fed claiming that they're going to taper, they're going to do this or that, is this past the point of no return?
I've been following the Austrian School of Economics, free markets. I read Fiat Money Inflation in France uh, back in 2002. And I knew then, after the Bernanke helicopter speech, that it wasn't going to end up well, because once you start printing money like they have been for almost 20 years, there's only two things you can do. You can either stop printing the money and everything implodes, or you have to keep printing. So when 08, 09 happened, I thought to myself, they will never, ever now definitely be able to reverse this. They tried to, but very quickly we saw in 2017, 18, with the unwinding of the balance sheet, with raising the interest rates, we saw the stock market almost collapse in late 2018. Then we saw the repo crisis in September 2019, and they had to reverse things very quickly, or else everything was gonna implode. And the crisis last year was very convenient because it gave him a cover to bail out Wall Street again. And so to say now that they're going to normalize things, it's the same thing's going to happen. It's probably going to be even worse if they try to do what Powell did in 2017, 2018, and a little bit of 2019. I think that if they try to raise their interest rates again, they probably won't be able to get back even to 1%, I would say, and everything would come crashing down.
So would you say that it would be fair that if people are listening to things that the Fed says, that if they choose at least to believe them, that the Fed saying they're going to taper, they're going to raise interest rates, like you may want to put that in the same department as Ben Bernanke saying subprime was contained?
Yeah, definitely. But the thing is, the algos and the people, a lot of the analysts on Wall Street and the fund managers, they don't know what you and I know. They think this is normal, and a lot of them are quite young, and they think zero or very low interest rates is normal. When I started out in the business in the late '80s, I remember when I worked in Switzerland for a small investment firm, we deposited clients' money at 7% euro dollar, which is a dollar deposit in Europe. And it was for 3-month money. So you were earning 7% per annum for a 3-month deposit. And now people think that 0.3% might be good. It's crazy. So I don't think we'll be able to ever get back to normal. And what will end up happening, as I said before, they can either raise rates and bring everything down, and then you have major bankruptcies of everything. So you want to hold precious metals. The other options, they keep printing, and eventually people lose confidence in the dollar, and you get the hyperinflationary crack up boom. So yeah, everything the Fed says, to me, I listen to it, of course, because it does affect things in the short term, but in the long term, they're just trying to prolong the inflation. And the thing is, you say that to people and say, well, but we have deflation. But it's because they've been, and I went to university, they didn't teach Austrian economics. It was only after doing it on my own, after I started working in finance, that I learned all about this. They won't teach this at the major universities. So people, they think that inflation is the PCE. They think that doing QE is deflationary. They say that QE is a swap, even though swap is a derivative. And if you do a derivative, you don't really increase the balance sheet. So a lot of people, there's a lot of confusion, not only in the mainstream, but even in the alternative. I hear a lot of people talking about the fact that there's no inflation danger, even though we've had massive inflation of the money supply. So, yeah.
Anyone who says there's no inflation is, if they feel like coming to buy me. I had a friend over last week. There's a Mexican restaurant right across the street. They give you a margaritas you can take out. 2 margaritas, $37 before tip. So
Wow.
Bernanke, maybe I can submit it to the Fed's discount window. Although you talk about how a lot of this stuff is managed, which I personally think ties into, normally you would see gold and silver skyrocketing. So obviously the government's going to have to look the other way when the banks rig the markets. JP Morgan caught, Bank of Nova Scotia caught, Deutsche Bank, they were caught in 2016. I don't know how they managed to get caught again. They're getting into Merrill Lynch territory with their activity at this point. Although, Mario, I'm hoping you can explain this to me, because I read this one last night.
I saw that, yeah.
Deutsche Bank will pay nearly $125 million to avoid U.S. prosecution on charges. So is that like a bribe, or I mean, it kind of reminds me, like in the movies when you see like someone goes to Mexico and they get in trouble and they give the cop $100 or something. Why? I mean, I'm assuming you didn't get a reimbursement check for losses that you've incurred due to Deutsche Bank foreign bribery schemes and manipulation of precious metals market. And I mean, I don't know, does this just go back to the Treasury, which is the Fed, then lowers interest rates, gives them more bailouts? I mean, am I out of line to say that that's like a payoff or a bribe?
Yeah, it's ironic because it's a bribe for something that they were accused of a bribe.
Yeah, they're bribing their way out of the bribery charges.
Yeah, well, I think I don't know if you've heard of John Titus of Best Evidence. He did a really good Yeah, he did a good documentary maybe a year or two ago, All the Plenaries Men, and he explains how the too big to fail banks like Deutsche Bank, JP Morgan, Goldman Sachs, HSBC, Barclays, these banks are all above the law, and because they're considered significantly important financial institutions or too big to fail. So they're under the protection of the Bank for International Settlements in Basel, Switzerland, who regulates the too big to fails. And basically, they can do anything really, unless it's just one individual in the bank that does something criminally. But if they do it for the whole of the bank, they'll get away with everything. You saw HSBC. I think it was under the Obama administration. They let them off, and they were found to launder billions of dollars for the Mexican drug cartel. And I think it was the chancellor in the UK, George Osborne, along with the Bank of England governor, along with the BIS, who told the US Department of Justice to stop the prosecution and just fine them. So um, Bill Murphy from GATA, he's in Texas. I've been following him since 2002 because I noticed when I started buying gold coins in 2002, and I watched the markets the whole day because I was in the city and watching the screen every day, almost at 1:20 London time or 8:20 a.m. New York. Gold would go down, and I never understood it why. And then I realized, well, that's when the COMEX is going to open. So they've been doing it for 20 years or more, and they get away with it because the government's involved. So there is one law for them and another one for us. I mean, if we try to do what they do, we'd be in prison. They just get slapped on the hand and they pay a fine, but the fine is worth it because they make a lot more than their fine. It's the cost of doing business.
They should just call it a tax.
Yeah, yeah. And I don't know where these fines go to. They probably go to the politicians who I don't know. It would be
Who
interesting
own the banks? I mean,
yeah, because I think Catherine Austin Fitts, she's done research. I think in the last 15 years or something, JP Morgan's played like 20 billion or more in fines. Like no one ever went to jail. They just settle. But to them, it's they can just they control the money supply. They can create anything. They've got the Fed. They own the Fed, of course, the banks. So the Fed just helps them. And people say, oh, so that means gold and silver will never really protect us. But it will, because in 1971, gold was at $35 an ounce. Now we got up above 2,000 last year. So they can try to manipulate it, but if they manipulate it too much, more and more people will buy the physical. And that's why I always say that people need to buy physical. They can't play the Wall Street game of futures and ETFs. The miners is different, but if you don't own gold and silver if you have a future or a GLD ETF. So if they want to really hurt the banks, they hate it when you buy physical. And I have an interesting experience back in the early 2000s. My mom had an account with a bank in Switzerland, an American bank. I won't say the name. And we bought some gold for her. And then I called them because I had the power of attorney. I said, well, we want to take a delivery. And they were really vicious with me. They said, you can't have it. Why do you want it? I said, well, because it's mine. And then they said, oh, this is FX gold. That doesn't mean you can have it. And I said, well, what if I bought euros, FX euro? Does that mean I can't have the euros? But then I just closed the position. And but they hate it. When you actually ask for physical gold. You've seen stories in the past. Morgan Stanley, I think you talked about them. They used to supposedly store silver for clients in New York and charge them fees. And then people found out that there was no silver. So that's how crooked these banks are. And you can say crooked, if they want to sue me, they can. But don't ever deal with with the banks as far as precious metals is concerned. Go to your local precious metals dealer and buy the real thing. That's I think the official holdings of countries is about 17% of all the gold in the world. So they have a lot of gold, the central banks, the treasuries. But if enough people start buying a little bit, they will be worried. I think they don't have as much control as people think. I think people shouldn't be discouraged and just keep stacking, keep telling people, keep informing people about the fraudulent nature of the precious metals market.
Well, and I'm darn fortunate that you are one of the people that has the courage to stand up and do that. I know it is not always the easiest thing, especially when we're seeing a lot of things that are happening this week. So I appreciate you being here and sharing all this. And perhaps you can let folks know where they can find you so they can stay posted. You have a great show that you share a lot of information I think people would really be well served to know of right now. And how do they find that?
Yeah, my YouTube channel is Monaco64. I make a video there every day. I have a live stream every Sunday at 4 p.m. Eastern Time, 9 p.m. London. And I have a blog now as well. I've had it for about 9 months. It's monaco64.net. I've been posting a little more there because I deactivated my Twitter account. So I'll be trying to put a lot more things on that blog, like my thoughts. Like today, as you see here, gold was trading around 1860 just before the regular hour opening on Comex, and right on cue, gold dropped like just before the open or during the open. So yeah.
Yeah, although I love what you have here, and maybe we'll end on the quote of the day, because when we can easily forgive a child who is afraid of the dark, but the real tragedy of life is when men are afraid of the light. Mario, appreciate you being a source of light in these times that I think have a lot of people concerned, but you have a calm demeanor, you explain the stuff clearly, and that's a great service to everyone in the world right now, and I thank you for that.
You're welcome, and thank you for having me on your channel.